Hi guys, welcome to the third lesson of a course. Today we're going to talk about trends and the break of structure, about structural points, and all the homework and PDFs are in my Telegram link down below. And without further ado, let's just jump into it. Don't want to waste any more time. Relatively simple but very important topic. And talking about trends, we have three types. We have an uptrend, we have a downtrend, and we have consolidation. It's when the price kind of moves, when we say a price chart goes just to the right. And let's start. We also have a classical trend and an impulse trend. And classical trend would look something like this. The price goes up, then we have 50 to 70% correction, and then it goes higher, correction, goes higher, correction, goes higher. That's just a classic trend. We're going to talk about higher low and higher highs a bit later. And an impulse trend, do it like this. So price would go up, 20-30% down, go up, 20-30% down, go up. Impulse trend, yeah. Now let's talk about higher highs, higher lows, lower high, lower lows. So higher highs is a higher maximum, and that's a point where the new price high is higher than the previous high, and the higher low is higher minimum. That's a local minimum that is higher than the previous minimum. And this one confirms an uptrend. It indicates after a correction, the price doesn't fall below the previous low. And let me just show how it looks like. So guys, let's mark it down. So that will be our high low. That would be higher high because it's higher, higher low because it's higher than this low, higher high that's higher than this high, higher low that's higher than this low, and higher high. In a downtrend, everything won't look the same, but the only thing is there would have lower low and lower highs, and the idea is completely the same but in reverse. So that would be lower high, lower low, lower high, lower low, lower high, lower low, lower high, and lower low. And you can see here as well that all the lower lows are lower than the previous low, all the lower highs are lower than a previous high. Let's jump on the chart. Here you can see that I have some break of structures or change of characters here marked. And that's in case you're struggling, guys, and you'll be struggling. You can use this indicator. It's called Lex Algo Smart Money Concepts. It's pretty good for beginners. I use it myself, but now I can just delete it as it was more just to show you guys how it looks like. Yeah, so something I want to say about trends is that the trend of your friend, and you should trade in a direction of a higher time frame, but against a lower time frame. And that's obviously something comes with experience, and you might have your own vision for it. But for instance, if on a daily, if here we have like a downtrend, then on daily, or sorry, on 15 minutes or on 30 minutes, whatever you trade, you might want to look for a pullback and actually go long. So guys, trend is your friend, but don't forget that most of the time you want to trade against a lower time frame. Talking about consolidation, something a great example actually here. This part. Consolidation is when you most of the time have a range high and a range low, and the price does not go above or below the certain targets. So let's see. Basically, I want to mark down this. And we see that price does not go, actually, yeah. So the price always stays in this frame, doesn't have any certain higher low, higher highs. Everything is not super clear. Most of the time after consolidation, the big price movement comes in. So it's either a big move to the upside or a big move to the downside. And yeah, let me just look at my notes if I haven't forgot anything else I wanted to tell you. Yes, guys, so in case it's hard for you to identify market trends via candles because it might seem too noisy with all the wicks and stuff, what you can do here is, for some people it might help, for beginners maybe you can switch it to lines. And it's way easier. as well as instead of just structural points, what you can do is you can interpret as waves. So for instance, an uptrend, downtrend, downtrend, and etc. And talking about break of structure, guys, break of structure is not something I use in a lot. I know it's pretty vital, but as of me, I'm not a big fan of it. I do not really understand it. Lots of people interpret it many different ways, and I wasn't bothered. But I will try to explain you the way I understand it, and in case you feel it's wrong, that's totally fine. Everyone is their own trader, and I just trying to push the way I see it. So for instance, we have an uptrend, and then boom, switch to downtrend. So as for me, even without any knowledge in trading, you can kind of see what went wrong here, especially if we start putting higher low and higher highs here. You can see that at some point this lower low closed below the higher low here, because in a normal trend it would have went like this in normal uptrend, and we would see next higher low over here, not below. So what I want to say about it is that in an uptrend, it's a breakdown of the last low, indicating a market change, and in a downtrend, this is a breaking of last high. So for instance, in case we do something like this, that would be break of structure in an uptrend. Boom, broke it here, boom, break of structure here. So guys, just remember, uptrend, breakdown of the last low indicating the market change. In a downtrend, this is a breakdown of the last high. That's very important, and it's basically the only thing you need to keep in mind. So why does a trader need the break of structure? Break of structure and confirmation, they help you to timely identify a trend change or its continuation, which allows you kind of to replan strategies, exit positions, open new ones, or maybe refrain from risky transactions. So let's try to identify some on the charts. First of all, we have to identify a trend, and let's take, for example, something rather straightforward. Let's wait. Oh yeah, okay, it's marking it down. Okay, so look, here's a great example. If we look right here, we can see that at some point it's going higher low, higher high, higher low, higher high, higher low, higher high, and boom, it fails. So here we got break of structure, because at some point it couldn't make a higher low and made a lower low. And if we progress, now we take it as a so here we don't know what will happen yet, but what we can aim for, and obviously I do not recommend trading just based off this, but some of you might just open a short position, waiting for a lower low to be made, as we open here a lower high. Let's see something else. You can see the big one here, so same thing. We go like this. Yeah, that's and boom. Here it has a break of structure. I decided to say it's in template. I took it from, I actually like the design. I like how it looks like. So I decided to save it as template. Yes, guys, but once again, break of structure is not something I use a lot, unfortunately, or maybe fortunately, and I don't want to get too much into details on it. I would much rather talk about some order blocks, liquidity, and stuff like that. I don't want to make video as well very long. So once again, thanks for watching, and all of the details and the PDF will actually be super detailed. So I highly recommend, in case this video was not informative enough regarding break of structure or trends, I highly recommend you guys visit Telegram, and I can assure you that PDFs will make it much more clear. And thank you for watching, and I'll see you in the next one.